Hello and welcome to my morning report analysis videos on Monday the 27th of March with me, Richard Perry, market analyst at Hantec Markets. We've got a pretty negative outlook on the European Open. Equities are lower, the dollar is being sold off, safe haven trades are performing very well, and that's coming on the back of this failure for the Republicans and Donald Trump to be able to push through that healthcare legislation through the Congress. The implications of that would suggest that perhaps going forward Trump is going to get significant hurdles that he's going to have to try and negotiate over in order to push through his fiscal spending, taxation plans, deregulation, everything that he's sort of been progressing that would suggest that the Trump trade is now going to be possibly correcting back. Now we've seen a sharp move low on the dollar. Now I've been talking about this 99.23 level on the dollar index, broken below that today, not yet closed below it, but that is certainly a key downside break, and certainly it looks like the big uptrend is going to get tested 97.93 if that were to be closed below 99.23 today. The treasury yields are a big driver of this move, lower on the 10-year and also the 2-year today, so when that happens you do tend to see the dollar under pressure. So we're seeing that. We've also got the oil price, which is under pressure. Oil price is coming back lower again. You've got continued increases in the US oil rigs, suggesting that US suppliers are continuing to sort of pick up the slack from the OPEC cut. We had a meeting of OPEC and non-OPEC countries at the weekend talking about possibility of extending the cut, but it certainly seems as though the US supplies are picking up the slack, and that is why we're seeing the oil price lower in recent weeks. So this is all fairly much sort of playing into the forex majors, where pretty much across the board the dollar is lower and the yen is the big strong outperformer. So yeah, lots going on there in the forex markets, big moves that we are seeing. So in terms of what we've got to look forward to today, which could change the trend, nothing really. The economic calendar is pretty bare. There has been the German IFO this morning, business climate, came out at 112.3. That's the highest on that German IFO since mid 2011. So yeah, really strong move, and that's also helping to support the euro again today. And yeah, it's not a great deal other than that, apart from a couple of Fed speakers. Fed's Charles Evans, who's generally a dovish, little bit more centrist in recent weeks, but generally he has been sort of more on the dovish end of the scale, so it'll be interesting to see what he comes out with today. And also Robert Kaplan, who is a centrist. He's speaking tonight at 10:30. So that takes me to my chart today, which is silver. Now silver has been rallying hard in the last sort of couple of weeks as this Trump trade has been unwinding, and again opened strongly high today. It's now through the 38.2% fib level. Look at these fib turning points. 23.6 hit the lows, 50% hit the highs in February. So now we're strongly back through 38.2%. Does that now mean we're going to move towards the 50% fib level once again? You've got the momentum indicators which are with the move. Turning points, RSI strongly higher, MACD lines having crossed higher, stochastic strongly higher. I think the momentum is with this run higher, but you've got this downtrend coming in at 1813 today. That is the historic long-term downtrend since June, July last year. So that is a key factor for the bulls to try and get through, but certainly at the moment it looks like we're going to be rallying towards a test of that downtrend. Initial resistance, you could argue, would be that rebound high 1798, but generally speaking, if you can get through that downtrend, you're looking at the 1848 resistance from the February highs. So in terms of your hourly chart, certainly just a progressive recovery that we've got now, higher lows in place. 1740 to 1770 as a basis of support now. 1740 reaction low, up towards 1770 reaction high there, so you've got all this sort of band of support here to catch a corrective move. A little bit of stretched on the RSI, maybe MACD lines, but to be honest, it's all fairly well set up for, I think, buying into any weakness today. So I wish you good luck in your trading today, and I will speak to you later. Thank you.